Well, it's a very good morning from me, Paul Archer. Hope everybody is well. Welcome to Paul Archer's Monday live stream. It's the, what is it now? The 14th of March. It's halfway through March. How cool is that? Let's just put me up on the screen so you can see me. Halfway through March, we're on to the spring. It's getting brighter now, and the Cheltenham Festival begins tomorrow. So welcome 280 odd thousand people to the town. So I'm hunkering down for 4 days, I think, rather than going out there, because there's an awful lot of people happening. Bars are open. There's the bars doing breakfast with beer. You know, I mean, what's that all about? But anyway, I'm sure it'll be a great time, and everybody will enjoy themselves. So, what's been happening in the mortgage market for the last week? Well, not a lot actually, truth be told. Brokers are kind of getting down to it and working hard. But one little picture did make me smile when I read about it in the paper this morning, and I'll share with you the BBC clip of this one. It's really quite cool. It's Sir Rod Stewart. You know, Rod Stewart, the crooner. Great singer, isn't he? Sir Rod Stewart, as he's now known as, was out. I think he's doing a bit of PR actually. But anyway, I'll show you the picture because it's really quite funny actually. Let's flick on here so you can see that. And Rod Stewart fixes potholes near his Harlow home. So there's Rod with all his football gear on, looking very slim actually. He's 77, not looking too bad for his age at all. And he went out there with his mates and he was basically filling in the holes that Essex County Council refused to do. And he put it on his Instagram. I think it was a PR stunt, but Rod Stewart doesn't really need a lot of PR, does he? Really, he's pretty cool, isn't he? But yeah, he said apparently he couldn't get his Porsche down there or something, or was it some Lamborghini or something that the guy had? I just thought that was funny, and there's nothing wrong with that. And in fact, if I could see any mortgage brokers with their Lamborghinis on LinkedIn, I'd probably die. But I don't think many mortgage brokers have Lamborghinis, do they? Or maybe they do, or Porsches. I know I never see a poor IFA. They've usually got some nice motors whenever they rock up on training courses and things. I think it's the way they charge under the funds under management, but that's all changing. We'll talk about that another time. Anyway, let's get down to some topics. I've got 3 topics for you today. We'll take a look at the year end. And I want to take a look at last instalment on the FCA. And I want to pick up on child benefit charge because it's a year-endy kind of thing. And I want these things to be relevant to mortgage advisors and mortgage brokers. And that's always the tough one, isn't it? Because sometimes these topics are very generic and they don't really mean much to the average mortgage advisor. But I think we can make that happen, can't we? Let's go on air because we can. Here. Hope you're well. Hope all's good with you. And all is good with you and your family and all the things that can be. So what I'm going to do then is I'm going to head over to the whiteboard for the first topic for you. So let me just change the button and pile over to the whiteboard so you can see me clearly up here. Now, the topic for this one is the year end. So it's a tax year end planning for mortgage advisor clients. So we're talking here about mortgage advisors. I'm not talking about IFAs. I'm talking about mortgage advisors or brokers, whatever your title is. There is a difference, by the way. It's tax year end planning for your clients. The thing about IFAs, though, tax year planning, there you go, nice big title there for you. The thing about IFAs or wealth managers, whatever they like to call themselves, is they're extremely busy in March. I've been trying to contact my IFA, Charlie, and he's just too busy. He's too busy doing ISAs and pension contributions and all the last minute tax stuff so his clients can get the benefit of various allowances. And that's been known for a long time. Mortgage advisors don't tend to get involved there because you don't give advice on pensions or investments. Well, you might do if you're a financial advisor. But there are a few things that you could, if you wanted to, use the end of the tax year as a reason to go back to some of your clients. Maybe your corporate clients or your buy-to-let clients as opposed to your average first-time buyer, because mortgage advisors, mortgage brokers do really get in the habit of reviewing client circumstances. It's very professional indeed. So there's 2 types of client really I want to take a look at. There's the first client. There's a little picture here. There's your first client. For those of you on the podcast, you can't see it, but it doesn't matter. It's a picture of a person. Now this is your mortgage client. That's your mortgage client. So the mortgage could be regulated, unregulated, doesn't matter. And secondly, we've got our client over here, and I'll put another little picture. Because I can, and I like to. But this one is your protection client. There you go. Now, you probably do both. As a mortgage broker, mortgage advisor, you probably sell mortgages and protection. some kind of lending or whatever it is, but you also do protection. Some of you might just do protection, but most of you are going to combine the two. You should do. If you want a good living and be able to sleep at night, you should be advising on protection. So what are the things you could talk to them, a mortgage client or customer, just coming up to the year end? Well, there's a couple of things really. First thing is you could take a look at is monthly payment overpayments on the mortgage. Now, most people tend to have fixed rates now, fixed rate mortgages. And as you know, of course, there's redemption penalties on those things if people pay lump sums or redeem the mortgage. But most of them will allow overpayment, an overpayment option there. And it's typically about 10%. You can make an overpayment in any 1 year during a redemption fixed rate period. Now you can make monthly overpayments or do a lump sum. So towards the end of the tax year, when the client probably knows their income for that tax year, sometimes lenders work on tax year end for this as well. Sometimes it's calendar year end. You could advise or talk about making a lump sum payment off the mortgage, which ain't a bad piece of advice to do, because that of course would reduce their mortgage debt and help them to pay it off a lot earlier as well. Now, if they're self-employed, or they are self-employed, or they're an owner-director of their own business, and there's quite a few people in that camp now, then you can talk about having a look at their accounts, because they may want to be getting a mortgage that year. And if they're self-employed, having a good set of accounts for the tax year so that accounts show profits, net profits increasing, might be what you need to get the mortgage they're looking for. But obviously they could, if they wanted to, not have such good accounts. Maybe the accounts have done really well. They don't need to declare so much. They therefore might want to think about putting some of their money into a pension contribution or some other kind of investment. Usually pension contribution is the best thing to do. If they're going to do that, of course, refer them back to their accountant and refer them onto an IFA if you have a conduit, which you should do, because obviously you can't get involved in that one as well. So that's something to think about. Advise them to do that to reduce their tax bill, unless they need big accounts to get the mortgage that you're looking for as well. On the subject of mortgage clients, you've got landlords as well. Now, landlord, I love that phrase, don't you? A landlord. It's very, very male dominated, actually, isn't it? Landlord, but landlady. Doesn't sound right, is it? But people who have portfolios of properties in which they rent, and you may well look after that client for their mortgage capability. I'm sure you do. If you've got landlords, then there's a few things end of tax year they might want to consider. The big one, of course, is capital gains tax. Now, capital gains tax is tax payable on an asset which you buy and sell at profit. Second properties are liable to capital gains tax. Now, the thing about CGT is you are entitled to an annual exemption, which allows you to make a capital gain of a certain amount of money and not pay capital gains tax on it. The thing about the annual exemption is if you don't use it, you lose it. And that's a big issue, that one. If you don't use it, you lose it. So you might want to talk to them about it to see if they're considering maybe selling one of their properties to incur a capital gains tax profit and maybe use the allowance to offset it. Talk to their accountant to get the details, because you don't want to get involved in that. But it might be something for you to mention. It shows you know what you're talking about as well. And the last thing as well, if again it is a landlord or somebody has a second property and maybe a holiday let or something like that, make sure they've kept records of all the improvements they've made to the property, because that's again another capital gains tax issue, isn't it? Improvements. There you go. And you need to show records of these things, because if you're going to declare a capital gains tax bill and you're going to reduce that by any improvements that you've done to the property, you've got to show receipts for it. So make sure you kept the paperwork, receipts, PDFs, whatever, to show the amount of money you spent on improving the property, not maintaining it, but it's improvements, to make sure they've got the records as well. So there's a few ideas there for mortgage clients that a mortgage advisor might want to get involved in. Now, over on the other side, on the protection side, there's a lot more you can do here. The first thing you might want to use it is like an annual checkup of the customer's needs, client's needs. And it might well be that you're going to review the amount of life cover. Review the life cover. And that's a really good thing to do, because when you recommended life assurance a few years ago, maybe to cover the mortgage, you might have also recommended life assurance to give them extra protection for their family. You should do. Now, you would have been protecting somebody's income. Now, one of them or two of them would have been earning the money, and you would have geared the life cover around that figure. Now, it may well be, of course, their salaries have increased or their income's gone up, so you might want to increase the life cover. It could be that they've got a lump sum, and inflation, of course, is beginning to surge away now. So again, you might want to increase the lump sum because of that. Entirely up to you. Something you want to have a conversation about. If you did that, of course, you would need to amend the life cover. Look to see if you can rebroke maybe, or extend the cover, or take out a new cover, depending on the client's medical situation. Sometimes these policies allow you guaranteed insurability, so you can increase the cover with no further medical evidence, and that's always a good thing if you can do that. So you need to know the details of the policy as well. Now, on the income protection side, IPP, there you go. This is one that you definitely do need to review annually, and just before the tax year is a great time to do it, because before the excuse me, the end of the tax year, if they're self-employed particularly, you will know what their profits were for the previous year. You'll know what their P60 roughly is going to be for the previous year, because you're in March, aren't you? Because remember, with IPP, it pays out a certain percentage of the person's income, typically around about the 60%, isn't it? It's the 60% rule. It does depend on the scheme and the product you're using. But that, of course, is based upon the previous year's P60 or net profits for self-employment, or director salaries and things like that. So you do have to be careful of that, because sometimes people's income might have gone down. If they're self-employed, particularly during COVID, it might have gone down. And you might be carrying insurance. Actually, that's too much. In other words, you're covering them for a certain monthly payment, not monthly benefit. That's not actually going to be covered by the 60% rule, because their salary or their profits have gone down. So again, you might want to review that. It could be that you opted for increasing benefit on the IPP. And that, of course, is where it goes up by RPI or some kind of index. Again, this might have happened for a couple of years. It might be that the monthly payment they're paying for is nowhere near what they're actually going to get if they make a claim. So you do need to review that and keep an eye on that one as well. So I think that's a really good thing to do. So there's a few ideas for end of tax year planning. At the end of the day, IFAs and wealth managers have got a whole lot more to do, because they recommend pension contributions and investments into ISAs, which all have tax breaks and tax years and things like that. If you ever want to go that route, of course, get yourself trained up as an IFA, wealth manager, pension planner. That tends to be the way forward, particularly if you're in the equity release marketplace. So start thinking about your own CPD. Could well be something to think about moving forward. But there we are. There is a place for end of tax year reviews. It's a great opportunity for you to contact your clients, maybe your better clients. I don't know where you want to go with that. Better clients, the self-employed ones, and to see if you can obtain a meeting and a chat. You could charge for that if you wanted to, or get some products or recommendations as a result of it as well. Do it on Zoom. No need to do face-to-face, because you already know them, don't you? You don't need to build rapport, because you've done that already. You just need to connect with them as quickly as you can. Hope that's been useful. Bye. Great work. Okay, let's just whiz back over here then, and we'll get ourselves onto our next topic, shall we? The next topic for you, which I want to talk about, is well, it's a continuation really of the FCA. We've been doing these for quite a while now, and this is the last update for you on the FCA. We've been talking about the role of the FCA, what they've been doing, how they operate, and all these videos we've been putting onto the boot camp to give people good study material as well. So what I'd like to do this time then is take a look at the last topic, which is the FCA and Enforcement Action. So we're talking here about what happens if you do something wrong. So I got a little slide here for you, so I'm going to flick over here. So let me just head over to this one. Let's talk about the FCA and Enforcement Action there for you. Now, the thing about the FCA and Enforcement Action, let's put me on the slide as well, shall we? Let's go there so you get me and the slides. How's that? Pretty cool, huh? So I'll pop myself here, so I'm kind of here, and you've got a few slides to my left as well. Now, the thing about the FCA is that they have a lot of powers, they have a lot of control, they have a lot of responsibility, and they do have the ability to take action against firms who don't do what they're supposed to do. In other words, they've harmed consumers, and they have the ability to harm to penalise the firm and to seek redress for the consumers, particularly if they've been harmed. That's pretty much the teeth the FCA have got, and they've got the law behind them as well. Now, there's plenty of crimes, if that's the right word to use, that you guys can commit, which of course would mean the FCA would be called into action. There's lots of rules you can break, aren't there? So, for example, you could be trading with no authorization. As a mortgage advisor, you might give advice on equity release where you haven't got the authorization to do so, or the exams either. So that's an example of a mortgage advisor. Maybe talking too much, advising on pensions or investments where you haven't got the authorization. And a lot of ARs aren't strictly oversighted, if you like, or supervised. So sometimes conversations can construe into advice. You can be very, very careful with that. So there's lots of things you could do wrong. Now, if that's the case, what steps then can the FCA take? So I've got a few examples for you up on the slides, so you can see from here. First of all, you could have your permissions varied. In other words, if you've done something that's wrong, the FCA could certainly vary your permissions. Now, permission, remember, is your ability to conduct certain types of advice. So they might withdraw advice permissions from you as well. They might withdraw approval. In other words, if you're an approved person under the senior management certification regime, they might withdraw that approval, and then you are completely stymied as an individual, aren't you? If you think about it, it makes sense. They could do a court injunction against you to stop you trading and to cause all sorts of issues with you. They've got the powers to do this, and they will do it too, which is quite interesting. They have the ability to restitution, to repay profits, if you like, that you've made from the activities. So those could be repaid, as you can appreciate. They have redress. In other words, they could require that you compensate the customer for whatever misdealings have occurred. It doesn't tend to happen for mortgage advisors and mortgage brokers. These things tend to happen for bigger firms, usually in the wealth management market as well. They have the ability to take disciplinary action, to penalise you, as you can probably appreciate, and they've got the ability to make everything public as well. If you've done something completely wrong, they have that ability to make it public, which some of the bigger firms with their brands can really hurt them. PPI was certainly something they did there. They publicised these massive fines against the likes of Lloyds and people at RBS who spend a fortune on their brand, don't they? So that's a huge amount of issue there. So the FCA have got quite a lot of powers, as you can see. So let's just take a look at enhanced supervision. Let's not forget that one as well. They can supervise you in a much more enhanced way. Let's take a look at fines and things. So what sort of steps can they take? What fines? I've got some lovely pictures here now. So let's just make this larger so you can see this in its entirety. I've got a printout from the FCA's website here from 2021, if you can just about read that. And we've got here some of the fines which they have imposed over the last few years. And they're quite remarkable, actually. I've got here a figure there. I need to read that. £567 million so far. That's a lot of money, isn't it? Total amount of fines so far, £567 million. There you go, in total. So that's how they kind of keep themselves running, don't they? That's how they pay the big salaries, I think. And here we have some different fines they've got involved. HSBC Bank, for example, at the bottom there. Can you see? December 21, 63 million. It's a lot of money, isn't it? The decision notice refers to breach the money laundering regulations. So there you are. That's a big fine, that one, isn't it? Just to click on to the next page for you. I got some more here for you. Let's go back to this one. Yeah. Let's go on to the next page. Yeah. So you can see this one. Yeah. There we go. There's a few more there for you. Got a broker's firm there, £642,000. Financial crime, Credit Suisse. A huge amount of money, that one, isn't it? Again, that's anti-bribery and financial crime. As an individual there, breaches a statement of principle of approved persons. So just look up, you can see that one. There you go. Individual was fined. So obviously it's a lot of money for an individual. Lloyds, 90. Again, communication with customers, general insurance and protection. We imposed a fine. There you go. There's my name there. It's not me. 110,000. Breaches of conduct of authorised persons rule, unfair treatment of customers in the claims management sector. It's a big fine there, isn't it? Again, a smaller firm here. the risk of financial crime. So there's quite a few fines going on there, just to sort of illustrate to you exactly the power and the ability that they have to seek redress. So whatever you do, don't take it lightly. The FCA can fine. Various other methods of penalising you as well. Some of those money figures are eye-watering, aren't they? Particularly with the money laundering one. I think the NatWest one's coming up, isn't it? The one where they had the bags of cash that were being laundered. I think that one's coming up too soon as well. Anyway, quick update for you on FCA and enforcement action. I hope that's been useful. Bye. Great work, everybody. Okay, hope you enjoyed the live stream this morning. Hope you're all well. What have we got coming up in our world at the moment? We've got a new boot camp starting on the 21st, next Monday, I think it is. A new boot camp, mortgage boot camp starting. We've got a few places left on that one. This allows you to get a helping hand to get all your mortgage exams done within a 4-month period. Boot camp's all video and audio and all those good things. That starts next week, so looking forward to greeting quite a few people on that one as well. Got a CMAP 3 audio product coming through as well, which we're recording live from the 24th onwards. I think 24th of March onwards, we're recording on Saturday morning live over a period of 12 weeks or so. And you're welcome to join us for free on that one. You get to listen, and it's a podcast, so we'll get that taped in and put onto a system so you can buy that later on in the year. So lots happening. The mortgage sector is going guns. Do a lot of work now with corporate clients, lenders, brokers, people who are looking to improve the skills of their people, because they're all getting very busy. So it's a good place to be at the moment. So I'm going to wish you to have a lovely week and enjoy yourself. Enjoy the sunshine. Well, it's lovely out there at the moment. I think we're into spring. The first time for a long time, isn't it? We're into spring. Days getting brighter and warmer and all those lovely things. So enjoy your week, guys, and I'll see you all next week. Bye. There you go, little green van. That's us done for the day.